This seemingly useless rock is now indispensable. Today's company, chosen by Trump, is Aluminum Company of America, or simply, Alcoa. Surely, Trump isn't favoring this company just because of aluminum foil, is he? First, I will briefly introduce the company's history. In 1886, chemist Charles Martin Hall discovered a way to cheaply produce aluminum in his home shed. He founded a company called the Pittsburgh Reduction Company, which later became Alcoa. The company invented the aluminum kettle and foil, and supplied aluminum to the world's first airplane, built by the Wright brothers. It was listed on the US stock market in 1925. Innovation continued. Thanks to the aluminum pull tab developed by Alcoa, can openers like this were no longer necessary. In addition, Alcoa's aluminum contributed to the first moon landing and the International Space Station program. In 1979, the company began full-scale aluminum recycling. Making aluminum through recycling is said to require 95% less energy than making it from virgin ore. In 2020, Alcoa launched a low-carbon aluminum brand and announced its goal to achieve net zero greenhouse gas emissions across all its operations by 2050. Alcoa is a company that mines bauxite ore, extracts alumina, and finally produces aluminum. Alcoa's headquarters are in Pittsburgh, Pennsylvania, USA. The company's CEO is William Opplinger. He is 58 years old this year and earned a Bachelor of Science in Industrial Engineering and Operations Research from Virginia Tech and a Master of Industrial Administration from Carnegie Mellon University. After gaining experience at Westinghouse and Emerson Electric, he has been working at Alcoa since 2013. He has served as COO and CFO and has been the CEO since 2023. To properly understand Alcoa, you need to know the process of how aluminum is made. First, bauxite is mined. Refining this bauxite yields white alumina. Electrolyzing alumina gives us the familiar aluminum metal. The aluminum is shaped into various forms through a casting process, and then delivered to customers. Easy, right? Alcoa owns a total of 25 mines, refineries, and smelters in 8 countries: the United States, Canada, Australia, Spain, Iceland, Norway, Guinea in Africa, and Brazil. In 2024, it produced 2.2 million tons of aluminum, ranking 8th globally and 1st in the United States. Alcoa's stock price as of November 1st is $36, and it has fallen by 8% over the past year. The market capitalization is $9.5 billion, and it is trading at a PE ratio of 8.4. The annual dividend yield is 1.1%. What is Alcoa's target stock price? Out of 17 analysts, 8 have a buy opinion and 7 have a neutral opinion. The average target stock price is $39.6. Last week, Morgan Stanley raised its target price from $42.5 to $43.5. Institutional investors hold 80% of Alcoa's total float. According to a disclosure document from March 1st, the combined stake of a company insiders does not even reach 1%. Let's review the earnings announcement for the third quarter of 2025. On October 20th, Alcoa announced the Gallium development project. The purpose of this project is to secure the gallium supply chain by developing a plant to extract gallium during the alumina refining process. It'll be deployed at Alcoa's alumina refinery in Western Australia. Meanwhile, this project is supported by the US government. What is so special about gallium? Gallium is a silvery metal with atomic number 31, and it has a melting point of 29.7 degrees Celsius, meaning it melts in a person's hand. Gallium exists in trace amounts in bauxite, the raw material for alumina production. Therefore, gallium can be extracted during the process of refining alumina from bauxite. Gallium is classified as a critical mineral essential for the semiconductor industry and the defense sector. A total of 760 tons of gallium were produced worldwide in 2024, but the US has no production capability. Meanwhile, the sworn rival, China, produced 750 tons and virtually monopolizes the supply chain. Alcoa's project aims to produce 100 tons of gallium annually. 100 tons is a significant amount, representing 13% of the 2024 global production. Let's look at the partnership structure. The US government, the Australian government, and a special purpose vehicle established by Alcoa will enter into a joint venture with the joint investment company established by the Japanese government and Sojitz. Each entity will receive rights to the gallium based on their invested capital ratio, and Alcoa is expected to receive about a 5% stake. The final investment decision will be made in 2026, and the goal is to start the first gallium production at the end of that year. Now let's look at the third quarter income statement. Total revenue was approximately $3 billion, a 3% increase year over year. Net income attributable to controlling interest was $232 million, a 122% increase year over year. EPS was $0.88, a 126% increase year over year. Let's analyze the third quarter revenue in detail. For accounting purposes, Alcoa's business segments are broadly divided into two, alumina and aluminum. Alumina segment revenue was $1.4 billion, and aluminum segment revenue was $2 billion. Year over year, alumina revenue decreased by 14%, but aluminum revenue increased by 13%. This is a third quarter balance sheet. Total assets are $16 billion, of which current assets are $5.3 billion. Total liabilities are $9.5 billion, of which current liabilities are $3.4 billion. Total equity is $6.3 billion. The current ratio is 156%, and the debt-to-equity ratio is 150%. While the 20% reduction in the debt-to-equity ratio compared to 9 months ago is positive, it is still high compared to other commodity companies like Cameco and Rio Tinto. This is the cash flow statement for the recent 9 months. Net cash inflow from operating activities was $650 million. Net cash outflow from investing activities was $250 million. Net cash outflow from financing activities was $95 million. Net cash flow for the 9 months was a positive $340 million. Cash and cash equivalents at the end of the quarter was $1.57 billion. The fourth quarter guidance is as follows. For the alumina segment, revenue is expected to increase by $80 million compared to the previous quarter due to an increase in shipments. For the aluminum segment, there is expected to be a negative impact from restarting the San Ciprián smelter, which was affected by the power outage in Spain. Therefore, revenue is expected to decrease by $20 million compared to the previous quarter. Now, what are the investment points for Alcoa? The first investment point is that aluminum demand is expected to increase in the future. Primary aluminum demand is expected to grow by an average of 1% annually over the next 10 years, and secondary aluminum demand is expected to grow by an average of 5% annually. This growth is expected to be led by countries other than China, and an increase in demand is particularly anticipated in Alcoa's key markets, North America and Europe. With the increasing era of electric vehicles, using lighter aluminum instead of steel helps reduce vehicle weight and improve driving efficiency. Furthermore, although aluminum has lower electrical conductivity than copper, this is an excellent alternative due to its lower cost. Beyond this, the demand for aluminum will continue to grow, and Alcoa, as a company that fully owns the aluminum supply chain, is expected to benefit. The second investment point is Alcoa's Gallium project, which is supported by the US government. The US is very serious about gallium recently. On September 15th, the US Department of Energy announced the Trace Gallium project to secure the domestic gallium supply chain and reduce dependence on foreign sources. If this project is successful, it'll be the first time in 40 years that primary gallium production resumes in the United States. Up to $6 million in federal funding has been allocated, and the final candidate will be selected in early 2026. As we covered in the previous Navitas semiconductor video, NVIDIA has partnered with several power semiconductor companies for the next generation 800-volt high-voltage data center architecture. It is still unclear who among them will survive. However, one thing is certain: as the demand for gallium nitride semiconductors increases, the demand for gallium will also rise. The timing is also good. The next generation data center market will not fully open until 2027 at the earliest, while Alcoa's gallium production is scheduled to begin at the end of 2026. China's best card in the US-China trade dispute is several critical minerals, including rare earth elements. China has already controlled gallium exports several times, disrupting the global supply chain. The US is trying to secure a gallium supply chain through Alcoa to reduce dependence on China. If the market begins to view Alcoa not just as an aluminum company, but as a gallium production company, I expect the stock price to be re-evaluated. Now conversely, what are the investment risks for Alcoa? The first investment risk is that since it is an aluminum production company, its performance and stock price are proportional to the international price of aluminum. As you can see from the graph, the aluminum price and the stock price move almost identically. Thanks to factors like the current US aluminum tariffs, China's production restrictions, and increased demand due to data center construction, the aluminum price has hit a 3-year high. However, commodity prices are notoriously difficult to predict. This is because various economic situations including supply and demand, natural disasters, coups or wars, and people's speculative sentiment all converge. If you invest in a commodity producer like Alcoa, you must accept this uncertainty. The second investment risk is ironically related to gallium. During the third quarter earnings call, it was revealed that Alcoa's stake in the annual 100 tons of gallium production is only about 5 tons. You might say that 5 tons is still something, but Alcoa is not the only company challenging gallium production. Rio Tinto in Australia has a plan to produce 40 tons of gallium annually in Canada, and Korea Zinc in South Korea also announced that it will produce 15.5 tons of gallium annually, starting from 2028. Let's briefly compare the gallium production plans of these three companies. In terms of production volume alone, Alcoa is overwhelmingly ahead with 100 tons per year, but its actual stake is only 5 tons. However, Alcoa's competitiveness is certain. It has the strong backing of the US government, and is scheduled to start gallium production the earliest. This concludes my study of various aspects of Alcoa. Will Alcoa's future be bright? Please feel free to share your thoughts in the comments. If the video was helpful, please subscribe and like. Thank you.